Hey everyone, in this video I'm going to highlight one green flag for Rivian stock investors, and that green flag came as a result of a question that was asked by a Wall Street analyst that was then answered by Rivian's CEO. So let's get right into it and dig into this greater detail of this green flag for Rivian stock investors. So the question was about profit margin and specifically gross profit margin. Rivian made huge improvements in this regard in the most recent quarter, and this analyst wants to know how much more ground is there, right? How much more progress can you make in this front? So the CEO jumped in and answered this question, and I think provided some great insight that I think is a big green flag for Rivian stock investors, saying, you know what? We've achieved roughly 35% reduction in material costs on the EDV program, electric delivery van, in conjunction with the shutdown that happened at the beginning of this year. Now, we already knew this from the earnings call conference remarks, opening remarks made by the CEO, but this part we got was new here. And we expect a similar level of reductions on R1 with the shutdown that's going to be coming next year. This was a new bit of information that came out as a result of this question, and that's a big green flag for Rivian stock investors. If Rivian can achieve a 35% reduction in material costs on their R1 lineup, including the R1S, the SUV, and the R1T, the pickup truck, that would make a huge improvement towards profitability. And management is saying a lot of the improvements in engineering that are going into the vehicle are going to drive cost out. So, in other words, they're progressing along the learning curve, figuring out ways to produce these vehicles at lower prices. So ultimately, there's going to be a 60% reduction in the number of ECUs in the vehicle, and along with that, a 25% reduction in the wiring harness length in the vehicle. So a decrease in production components is ultimately going to reduce the costs for producing these vehicles. And ultimately, this will ladder up to margin targets they talked about, which is a 25% gross margin target for their normal facility. Vehicles produced in the normal facility will eventually achieve a 25% gross profit margin, which would be industry leading in terms of EVs. Tesla, for one brief moment, achieved gross profit margin of 29%, but that's quickly come back down. In its most latest quarter, Tesla's gross profit margin was, I want to say, 18% or so. So even Tesla's not at 25% right now and may not recover back to those levels. But here we are with Rivian targeting a 25% gross profit margin in that facility. So it looks like they've got ambitious targets, to say the least, but it looks like they're achieving progress towards that front. And so you can't doubt management at this point because of the progress that they've made, especially in the most recent quarter. They've earned some investor credibility with this progress that they've made and making that target. So a really good news and a green flag for Rivian stock investors. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.